is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I am Alex Tapscott here with Andrew Young. Andrew and I have spent a lot of time in the last few weeks talking about the current state of the market, what the big trends and narratives are that are driving new capital formation, where we think things are headed here as we go into the fall and the election season, what the impact of the, Mt. Gox liquidation and some of these other key catalysts mean and represent for the industry. And we've shared our opinions. And now, fortunately, we have someone on the show who has informed opinions and can actually opine on this, having done a lot of the research. And that's Tom Dunleavy. Tom Dunleavy is formerly was on the show when he was at Masari. He is a market strategist, analyst, investor, someone who does deep dives into the dynamics within crypto assets and comes up with some really compelling and I would argue quite unique alpha generating insights. And he's recently put that to work, joining a firm, MV Capital, where he's currently a partner and chief investment officer overseeing a $20 million VC fund focused entirely in the Web3 space. The fund's already invested in over 30 projects since 2021 and evaluates at least 1,000 projects annually. He's also an active angel investor and advisor for Web3 projects. Tom, we're so happy to have you back to make sense of what the heck's going on in the world. Thank you for joining.
Of course. Appreciate you having me on. Great to be back.
All right, so let's talk about some of the things that are top of mind right now. The Germans are selling, and Mt. Gox is finally returning capital to creditors. These are two events that a lot of people have said are putting some pressure on the price of Bitcoin and by, association, all the other assets in the space. Where are we at in this sort of cycle of selling and when do you think it turns?
Yeah, so let's take a step back. I mean, summer months in general for risk assets are usually periods of very thin liquidity. So market sales, especially for markets as thin as crypto, have a pretty dramatic effect. If we're looking at each one of those different selling points in turn, so Germany has sold, I think, 28 out of the 20 or 50,000 Bitcoin it has. So it has about 22,000 left. And they're basically just day by day market selling. So there's going to be that bid in the market for the next week or two. If they continue at the current pace, they'll be done by sort of mid to late July. Mt. Gox, a lot of those claims were sold over the period of 10 years where you could monetize those investments. So the people who were picking up those claims were doing it to stack more Bitcoin. They weren't doing it so they can, make a profit on the exit. Of course, that's the end goal, but I would view those as much more long-term holders. Additionally, the average price that Bitcoin was when Mt. Gox went down was $500. So if you wanted to monetize your Mt. Gox investment, you could have done that a long time ago. The US government has a stash of Bitcoin to sell. It is smaller than both of the other two entities. They've been pretty judicious of selling their Bitcoin sort of TWAP style in the past. In aggregate, that's about $22 billion worth of net sell pressure that's coming to the market over, call it, the rest of the year. So that almost evens out with the ETF inflows, right? The one thing that I think...
When you say 22 billion, you're adding up, the Germans are definitely selling.
Yep.
The Feds will sell, as you would say, in an orderly fashion. What percentage of the Mt. Gox claimants are you factoring in there as sellers? Because I agree with you that some of them are probably going to get their Bitcoin and not even sell it. They're going to hold it. I actually know the largest Mt. Gox claim holder. And, someone who invests in Bitcoin and has no plans on selling, really, right? So I can't say who that is on the show, but, I don't know, what do you think the numbers are for that?
Yeah, I would estimate, less than 30% would be sellers there. That was in aggregate if every single one of those coins was net sold. So that's 22 billion. So Mt. Gox has about 8 billion in aggregate. It's maybe half of that, or to 30% of that is sell pressure. But, we know the US government and the German government, which has, roughly 14 billion, is going to be a net seller. So that sort of cancels out a lot of the inflows to date for the ETF. Now, the thing that I think people are not looking at is the incoming buy pressure from the FTX claim holders. So FTX claim holders are receiving their money in cash. The period where the I think dispute resolution or whatever they call it for legal terms is October. There's 60-day period after that where capital will have to be returned in cash to those investors. So, what percentage of those investors are actually going to repurchase crypto? I think a pretty meaningful portion, and that amount is in the 12 to 16 billion dollar range, depending on the final liquidation amount of the FTX assets. There's going to be a percentage of those assets that were actually sold to distressed debt firms, others who are looking to kind of capitalize on the FTX situation. By my estimate, that number is less than $1 billion. So whether those guys hold or not, or repurchase or not, remains to be seen. But you're going to have a pretty sizable portion of incoming capital, I think, in the back half of the year, just from that event alone.
Is that more than the sort of overhang of, because I believe a lot of what FTX sold was locked, Solana, Sol, locked different coins. So I believe there's like an overhang starting in 2026. Again, correct me if I'm wrong. Is that kind of just like a far away problem, or is that kind of dwarfed by the amount of cash entering the investors?
So there's been a lot of Solana sold OTC, so that's over the counter directly to funds at a discount. That has happened over the past, call it 3 to 4 months. Those tokens are all locked and vesting over a 4-year period. So I would not consider those, meaningful supply overhangs. From my understanding, and they're really.
I think, Tom, you probably know the data on this, but I remember it was sometime in like February, March, when there was a lot of that Solana coming to market. And I think the price of Sol at the time was a little over $200. And I think people were buying like Sol for a 4-year lock period at like 100, maybe that like 110 even, which is funny because like in this most recent downturn, it got like fairly close to that. So you could have paid a modest premium and ended up with free trading paper, and instead you're locked up for 4 years. But I might have the numbers wrong. Maybe people wanted a bigger discount.
No, you're right. The discount was 40% that I saw.
Off of like 120 basically. If it was 200, like 120 essentially. Yeah, I think that's what I remember too.
And just to extend that, there's been a lot of OTC deals in this particular market. So Avalanche had a big program where they sold, I think, 9 figures of Sol over the counter at a 40 to 55% discount. Ton has been selling over the counter, directly out of the foundation entities and others. There's been a number of these. And in my view, I think what they're trying to do is just at a time when the market was pretty good, get more stakeholders involved and also have more distribution of their tokens so they don't have to worry about further sort of liquidity events in the future. But there's been a lot of OTC activity in the market.
So I guess like one other question I had when I was seeing a lot of this, because like it sort of confused me because Solana has been obviously one of the best performing coins in the last 12 months, particularly within like the majors. And my sort of, again, maybe it's just like a first order thinking was that when they were selling their 4-year locked up Sol, the people who were buying it would then hedge by shorting perps or futures. Is that like the right way to think about it, or is it just these are people who are deploying fresh cash who want to be long Sol at a good price?
It is very unusual for investors to short perps unless you are putting on a very short-term tactical trade. And I'm talking 1 to 3 months. The funding costs will certainly eat you up, and the trade could unwind pretty quickly. And if you want to do it with a big market maker like GSR or Wintermute or something like that, they actually charge you a pretty hefty premium, so it's not really economical. So these guys who are buying it are structural long-term Solana holders, just knowing some of the people who have purchased these. And they're just saying, hey, great, I get Solana 50% off. So might as well grab some.
Interesting. So let's talk about the market dynamics right now. So we're going into the fall. There's lots of discussion about the election and how this has become an issue. We're seeing this Fair Shake super PAC has raised all this money. Crypto is appearing in like the Republican platform for the first time ever in any major party platform. The Trump administration's accepting, or the administration, the campaign is accepting crypto, donations. Like people seem to be making a big deal out of all this, and yet it doesn't really seem to be having any impact right now. Do you think that this political momentum, such as it is really going to start to change things? And to what extent could that have an impact on the market?
Yeah, and just to put a finer point on that, Fairshake is actually the third biggest super PAC after the major Biden and Trump super PAC. So there's a lot of economic weight. And then Multicoin just launched a special fund as well called Sentinel, that they're going to have a number of millions in there to also deploy to crypto favorable candidates. So there's going to be, and I think these are really going to affect the Senate and congressional races much more than you're, really having an impact on the presidential election. So, if we look at just general presidential cycles, irrespective of crypto, government spending ticks up by about 15% in the back half of election years. If you look at the Treasury General account, which is the the Treasury's account at the Fed, that got filled up with all of the tax receipts in April and earlier this year, and they have about $1 trillion to spend on programs. If you look at folks who really focus on that portion of the market, look at the liquidity portion of the market, they're seeing 10, 20, 30% increases in liquidity in the back half of the year to support the Democratic platform and to support potentially the markets as well, as we're moving into a rate cutting cycle in the back half of the year. I think Citi has 8 rate cuts on the table for the next 12 months. So, what you're seeing is very supportive markets because of the election, but also because of the easing conditions we're seeing through just the broader macro environment. And this fits very cleanly kind of with the 4-year Bitcoin cycle, the 4-year liquidity cycle. So the back half of the year has really almost too much going for it. It's almost like, you have all these things lined up and it seems sort of consensus that Q4 is going to be so fantastic. That's honestly what worries me the most, because what is this big black swan that's going to knock all of these seemingly good things that are aligning out of kilter?
And what is that black swan? I guess we can't know. That's what makes it a black swan, right? I mean,
I think the biggest black swan would be a Democratic victory at this point. If you look at prediction markets, I think Trump's like a 60% chance to win, very favorable chances to win the Senate. There's a very good chance of, a red sweep. And if that happens, I think we get a stablecoin bill pretty quickly. I think we get a market structure bill pretty quickly. And that's all obviously very positive for the crypto space, given that the US is still the largest market and drives a lot of the mind share and capital. That would be the biggest black swan in my view, unless we have another pending exchange implosion or something like that. That I can't predict.
Let's hope not. So just turning the focus back to MV Capital. So I love your stuff on Twitter. We've had you on the show. I was a big fan of your research at Masari, and I know you love to go deep on the crypto stuff, but I do find this market commentary incredibly helpful as well. And I'm just wondering, to what extent does your day job, I guess, relate to this kind of market structure, market sentiment stuff? Because it seems to me like one is more early stage, right? Like the VC investing is happening like in early stage projects. So I'm guessing maybe not all that always liquid tokens, maybe taking a longer term view, much more based on team and project and technology versus market dynamics. But maybe I'm wrong about that. So can you talk a little bit about that work as well?
Yeah. So MV Capital is a very traditional venture fund. So I have LPs that I answer to. We manage a portfolio of 34 private investments. We also have discretion to do liquid, which the unique thing about crypto is, this doesn't happen in the traditional venture world. You're essentially managing kind of like a liquid hedge fund at all times, because if you're investing in tokens, your tokens naturally come to market, which immediately has a buyer sell decision or hold, right? That you sort of have to initiate. So that's very interesting, understanding the crypto market dynamics. You're funding pre-product, pre-revenue companies based on ideas in a market that's changing rapidly. So I find that very exciting. The reason I really like VC and the reason I decided to move into the space is positive sum. Every day I'm trying to work with founders, trying to help them to understand when they should go to market, how they should go to market, how they should think about their tokenomics, what's the best competitive edge, what are the new things that are coming that they should be thinking about. who are the right people they should be talking to, and working with other VCs to kind of co-invest alongside. It's very positive sum versus traditional liquid markets in crypto or anywhere else. It's very PvP, peer versus peer. I don't want to give you my edge. I don't want to tell you too much about what I'm doing because you might get my secret sauce. So for me, crypto VC has been really refreshing in that light. The unique aspects of crypto and VC in particular are really around the tokenomics and thinking about the distribution schedules, the unlock schedules, the go-to-market strategy, the incentive mechanisms around these things. It's all nascent, it's all emerging. And we've seen this everything from the ICO phases to the recent airdrop booms. And I don't think anyone has the right answer. So it's very dynamic and interesting place to be working. But crypto VC is the wild, wild west for sure.
Yeah.
Sure. Yeah, you want me to jump in? So what I'm also curious, like, what specific areas in the crypto market are you most excited about? Like on this pod, we constantly are talking about like the sort of multi-chain world, how it's becoming clear that there's an explosion of new chains, whether that's and constantly like almost new types of segments are coming out. And so I'm just kind of curious, like how do you think about which areas you're most excited, whether that's specific areas of infrastructure, specific areas of DeFi, or applications themselves?
Yeah, I have some pretty strong opinions loosely held here. The only areas that have really gotten adoption today in this market are stable coins, effectively, right? I think there's a pretty clear use case outside of the US for payments, remittances, et cetera. You can just look at the numbers that are out there and they're all very impressive. And then some level of DePIN. So we can think about Helium having almost 100,000 paying customers for their $20 a month program. Hive Mapper mapping 21% of the world, having 140,000 contributors. Demo has 90,000 vehicles that are capturing data. IONET, which is a new generalized compute platform, decentralizing compute power, has made $500,000 last quarter alone. I mean, there's just a number of examples in decentralized physical infrastructure that we find immensely attractive, and we've been investing in that space, since I joined MB, and have been interested in that space since my time at Masari. For this next cycle, I think we're just going to see the expansion of deep end use cases. We're going to see the expansion of things that support stable coins. And then we're going to have, hopefully, a set of interesting consumer applications on top of that. So, looking in those two verticals, stablecoins and then DePIN, but then also trying to find the consumer applications that are actually hitting right now. I still haven't seen too many that I'm extremely excited about. I mean, there's a lot of things that I think could happen on the Ton blockchain, for example. I mean, when you have 900,000 monthly active users, you throw enough products there, you're going to find something that's interesting and sticks with a cohort of people. So far, it's been these crazy tapping games where like Notcoin and Hamster Combat, where you just like tap on your phone and you win a bunch of coins. But I'm hopeful that we'll move beyond that. For us, it's really DePIN is our biggest focus.
That's interesting. Yeah, DePIN. We had the Hive Mapper CEO on the pod a couple months back, right before DePIN really sort of, I would say, blew up. It's been like one of the best performing sort of subsectors of the crypto market. So we'll see. I've also seen a lot of hype on Ton right now. It seems like a lot of people have really started to sort of triangulate on Telegram, the Telegram chain. I think I saw something that they're building out their own layer 2 network as well today, using Polygon, which is pretty cool.
Yeah, that just dropped today. I mean, it's a pretty simple sort of like mid-curve approach, right? Like you just want to go to where the users are, and users are already on Telegram. Instead of trying to pull them in on chain and from all these other L1s, it's like, okay, we're going to go to where the users are, and we're just going to actually provide them some level of utility. And it's starting with stablecoins again. There, it's really just the Ton wallet is the simplest way to transfer cash on the app, and it's moved on from there to gaming, which is all these Notcoin games and other things that I mentioned earlier, and hopefully it'll move on to something with a little more utility subsequent to that. I mean, I think the end goal is probably like sort of an everything app like WeChat is in China, or something along those lines, which would be, I think, a huge win for the space.
Yeah. What about DeFi? I mean, I know that there was a lot of projects that came and went, but some of them are still running at scale. I mean, Uniswap is still doing a couple billion a day of dollar volume. It's got more trading pairs than any other exchange, centralized, decentralized, or otherwise. I mean, like, to me, the appeal of these different platforms has always been that you incentivize users with ownership. And with an exchange, it's perfect because an exchange is only useful if it has liquidity. So the more liquidity you provide, the bigger stake you can potentially own. Do you see that continuing or rebounding? Everyone's talking about, DeFi 2.0 and maybe there being a renaissance. What's your take on that?
I will probably offend some people, but I think DeFi is fairly uninvestable this cycle. I think all of the primitives that we've needed in terms of borrowing, lending, trading, infrastructure platforms, derivatives platforms are all already built in pretty strong V1. The things that are emerging from there are, in my view, far too complicated for the next level of people who are onboarding. So like using liquidity position or LP positions to actively take loans out against, doing complex derivative strategies, structured products. Like, I don't know. I don't think the next million people we're going to onboard in crypto are really ready for that. Maybe like the next 10 million people after that will find a very small sliver that is interested in esoteric financial products. But I think we have the table stakes there right now, and there's already probably too many of them because it's just copy paste of the same things. And I mean, even if you look at like some of the stats, like Aave's loan volume is down 50% from the 2001 highs. Like, yes, Uniswap is a fantastic solution and will continue to do well, but do we need like 10 Uniswaps? No, I don't think so. The one area that I think we still haven't cracked is under collateralized lending. Like, over collateralized lending through Maker and others, I think is an inherently broken model. It doesn't make any sense. And fractional reserve banking has survived this long for a reason, because it expands the capital base. So that's an area that's interesting, but I think to unlock that, you really need to crack decentralized identity first, because you need to be able to have something you can loan against for an under collateralized loan. So that's the more interesting area to invest for me. But if there's a protocol that's kind of working on that, I'd love to see it.
I mean, it's something we've seen a lot of. Sorry, I'm just curious. Like, what have you seen? Anything you think is mildly interesting in that area?
There's been a ton of shots on goal at decentralized ID, and I haven't seen anyone crack it yet. And then there's been a ton of shots on goal for under collateralized lending, and none of them have worked. So still two areas that we could see some growth in.
Wrote about this like 3 years ago. Nothing.
Yeah.
It's
probably the hardest area in the whole space to crack. Some people think it's just impossible. We've had Sydney from Maple on the pod a couple times.
Yeah.
They obviously take like a very targeted approach. And I guess it's not fully under collateralized, though. I think they obviously sort of focus on like market makers in crypto.
They know who their counterparties are, and they're a lot largely like institutional lenders, right? Or borrowers. It's very different from the idea of, can you create decentralized lending marketplace based on reputational loan, the same way, we have lending to people who can't, when you get a car loan, or a credit card or a line of credit, oftentimes it's not secured against any asset for, more like low and subprime borrowers. But that's the vast majority of borrowers out there. So the idea is like, is there a way to do that using, reputation scores? We had a project on like 2 years ago that was trying to do like a FICO score type thing. And it even used the same like number range as FICO, but wasn't, I don't know. I haven't heard an update. I shouldn't say, I don't really know where they're at, but that was one that I think some folks were excited about. I know Chamath's like VC firm invested in those guys. There's some other stuff out there, but yeah, I agree with you. It seems like something that, an idea that's a good idea, a hard one, and then, what are the implementation challenges, or maybe too tough to overcome? I'm not sure. That seems like something that should have scaled by now.
It seems like something we should have done already. It seems like something that actually ZK might be able to solve if you're able to offer up your bank statements anonymously, your ID anonymously, your whatever records, and have a holistic picture of your reputation. But I don't know if that solves like the civil problem and things like that. If you could just make 20 of those, it's all the nuances that are tricky here. But yeah, it seems like it should have been done already.
Yeah.
What I'm curious to think also, like, how do you think about positioning your fund based on the market cycle? So to give you kind of like an example, a year and a half ago, everyone was kind of obsessed with real yield. So like projects that had, actual revenue that surpassed their token incentives because in a way that sort of showed that they're sustainable during the bear market. Whereas kind of like right now, the really quote unquote high beta, low revenue sort of projects, i.e. like things like meme coins, have been doing really, really well, as well as obviously the majors that are tied to ETFs. I'm just kind of curious, like, how do you think about market cycle and how you position? And does that also sort of dictate whether you do more kind of like earlier stage privates versus liquid as well?
Yeah, so we're solely focused in the seed stage. So you're going to see a range of opportunities across every vertical. That being said, you certainly have to focus and develop an expertise in a particular vertical and have a very long-term vision on what it takes to get there. So, and understanding the timeline for what actually it takes to develop these things. So if you're developing a game and you want a game, we've talked about this probably a million times, but games take 4 to 5 years plus to develop. So if you invested in a game and you were expecting returns within 3 years or 2 years or whatever, you were wrong. If you invest in a DeFi project, those things are fairly quick to spin up. I mean, the biggest problem is liquidity. So you want to invest in those when you're nearing sort of a market high or a bull market, because you're going to be able to facilitate more liquidity. Decentralized physical infrastructure, you need to scale the network to thousands of different devices. That's another long-term investment that's really cycle agnostic. So it's really thinking about what is going to work cross-cycle, in our view, more than anything. Our portfolio is fairly well diversified. We invested a lot in gaming in 2021, 2022, and those games are actually just coming to market today. We've invested in DeFi kind of last year because we thought this year would be a really good year. And hopefully a lot of those projects that we invest in are going to come to the market with strong liquidity. So it's really about understanding the underlying business fundamentals and then investing accordingly, but cross business cycle, cross crypto cycle as much as possible.
Andrew, I know we were just texting. He's got one other thing. We weren't sure if we brought it up yet. Go for it.
Yeah, no, I was just reading through your predictions for 2024, and I think the second one really caught my eye because it looks like it's already partly come true, which was quite out of consensus when you made the prediction. But it looks like one of your predictions was there would be a Solana ETF launched in 2024.
That hasn't come true, Andrew. It hasn't come true. It doesn't mean that it exists. It's like Leonardo da Vinci's helicopter. It didn't work.
I know, but I have to give him credit, though. That was pretty out of consensus that there'd even be a filing in 2024, especially like the current state of ETFs at the end of 2023.
The first Bitcoin filing from the Winklevosses came in 2013.
I actually think, at this point, I actually think it's more likely that another token gets the ETF before Solana, given that it's considered a commodity now. It's considered a security by the SEC. There are a number of things that we wouldn't consider investment grade, like Dogecoin and stuff, that are probably going to get some sort of ETF before that. Unfortunately, I think this is very much a play in the administrative state. And my bet was that Gary Gensler would be out leading up to the election because he's just causing the Democrats way too much headaches. But it seems like they have other things to deal with now. So I don't know if that's going to be the case. I still think we're going to see a number of ETFs in the next 12 months if the Republicans win. So Solana ETF, awesome, would be happy, but I think we said the other things beforehand.
Yeah. Interesting. I mean, there are lots of ETFs that have securities in them. Why is that a disqualifier?
I don't know if it's a disqualifier. It would just be, yeah, I guess it wouldn't necessarily be a disqualifier. I guess it's more that it's being litigated by a government agency. So could you actively, put it in an investment product that retail could purchase? I'm not sure.
Yeah, I think that's probably the right reason. Yeah, interesting. So basically, like the TLDR here is that the next little while could be choppy because summer months have low liquidity and we've got a couple of these big sellers. But the read through into the fall is the combination of the election plus this FTX, settle the money coming back and just sort of general seasonality. We're going higher. So position yourself accordingly. Like, is that sort of the short end of it? And I'm referring simply to just sort of like large cap liquid crypto, not the stuff that you do on the VC side.
Yeah, for sure. And I think folks are kind of writing off the ETH ETF because we've seen this story before with Bitcoin. And I think,
that's the one. Why are we talking about the Solana ETF? We should be talking about the ETH ETF. Sorry, yes, go ahead.
Yeah, and I think people are writing this off like way too quickly. We saw, I think, a 36% pump from the day the ETF started trading on Bitcoin to the top, and more than 50% from when they were initially kind of rumored to be launched. ETH is, an asset that has much less supply outstanding, and I would consider much more reflexive than Bitcoin. You have 27% of ETH staked, then you have 12% locked in smart contracts. So, call it 40% of ETH that is off the market. Net, you have about 10 million Ethereum on exchanges that actually can be purchased today. So, even if you consider ETH as a much smaller asset, it has a much smaller supply that can actually be purchased by these ETF holders. Coming from TradFi, I think, and folks argue about the yield, like, people don't want to buy a product that's, an Ethereum product that's not staked because they can't get 3 to 4% yield. Like, I don't think people really care about that nuance. I mean, they're buying Ethereum for the 5 to 10x. They're not buying it for, the very simple yield. This product is much easier to explain to financial advisors and end clients than digital gold, in my view. You can say, deflationary assets, has cash flows. Okay, you can put it in a DCF. Great. Like, I think ETH is like catnip for traditional finance investors. And, I think we're going to see, in my estimate, $7 to $10 billion flow into this ETF over the next 12 months.
So
it's interesting.
Yeah, and I also wanted to probe one of your other sort of predictions was you had Bitcoin going to 100K, ETH going to 8K, but then you actually said Solana is going to outperform both. So yeah, just kind of curious about your sort of the reasoning on that side, as well as just like your specific price targets for the other two.
Can I just sort of interrupt? When was that prediction made? I'm just curious.
January 3rd.
January 3rd.
Yeah, before the recent run up. So, so far so good. I
would just simply say that, like, in that period of time, like, Solana has done exceptionally well, right? And probably maybe it hasn't outperformed, but it's done very well. So I just wanted to, like, it's not from now; it's from whenever you said that.
For sure. I
wanted to clarify.
Yeah, I think that just before Tom goes, that's also a prediction that's looking pretty good so far. I mean, Bitcoin, Bitcoin and ETH both rallied, and like you said, Sol's been, I believe, outperforming, or at least perform on the same relative scale. So.
Yeah, Solana's up. Let's see, year to date. Yeah, so year to date, Solana has slightly outperformed. It was market day outperforming before the recent sell off. Yeah, that's really a bet on. Solana has seen, and the fundamentals are trending this way at the time, and they've since only increased. More transaction volume, more daily active users, a much more clear and coherent roadmap than the Ethereum roadmap. Not to mention a much more coherent liquidity picture for users rather than the fractured L2 landscape. There are interesting things being shipped there every day. I mean, you could just look at, blinks and actions that just shipped the other day, which is essentially forecaster frames that you can embed in Twitter. And then, buy tickets, buy meme coins, whatever, directly in Twitter using your Phantom wallet. They have an interesting design space and distribution platform through the Solana Saga. Where's my phone? Actually, I'm on it right now. I can't show you, but the Solana Saga 1 I have, and the Solana Saga 2 is being shipped out to 500,000 people that are going to have crypto native wallets directly embedded in the phone next year. So, Solana is executing at a much higher rate than Ethereum. They are dominating a lot of the sectors we like. DePIN is one area Solana is has a strong foothold in. And there's just a number of reasons that, fundamentally Solana seems, even at the time, like it had, it was oversold for what it was worth on. In terms of specific price targets, I think Bitcoin 100K is fairly consensus. I think there's been a few higher price targets since then. But just looking at previous cycles, that would be a good price target for this year. I actually think if we're talking about when we peak out for this cycle, it's more the mid to back half of 2025. And that is much more of a 150K Bitcoin price target for me. Slightly higher on Ethereum, slightly higher on Solana. I think they continue to move sort of a beta to Bitcoin as Bitcoin sort of ossifies. But a lot of interesting things that are going to happen for that. Again, I think a lot of it comes down to the election, how the legislative agenda lines up in the U.S.
Yeah.
Sorry, Alex. One other question, just as a follow up. A lot of people have been talking about one of the biggest overhangs for ETH has been past ICO projects that are sitting on tens of thousands of ETH that essentially are just selling the ETH over time to fund salaries and things like that. Gollum is kind of like a good recent example. I believe they're sitting on hundreds of millions of dollars of Ether, and the token trades below the actual treasury value. So that's kind of like a very known bearish overhang on ETH for like the last 5 years. I'm curious, some people have been making the comparison to meme coins on Solana as having like a similar long-term bearish overhang. It's a little bit more fragmented, obviously, because for the most part, like meme coins, they're not creating hundreds of millions of dollars of value the same way. But given like the high sort of propensity for meme coins on Solana, and obviously Solana is kind of like the dominant platform for them, to kind of sell proceeds back into Sol, sometimes sell the Sol back into USDC. I guess, do you see that as like something that's sort of boosting Solana in the short term, kind of like how ICOs did, but is going to be like a long-term bearish overhang? Or is that comparison not sort of apt?
Yeah, I don't lend too much credence to that. And we're already seeing kind of the meme coin trade unravel. I mean, Pump.fund just shut down completely, which was launching 90% of meme coins. They announced they're stopping business. So, I think that, and Solana prices still hung up, and you've seen a ton of these meme coins sell off very, very sharply, particularly ones in the Solana ecosystem across Q2. And Solana didn't sell off as sharply as a lot of those. I mean, it was down 30% or something from the highs, but you had some of the bigger meme coins being down 50% plus. So not something I'm super concerned with. In terms of projects that still have ETH from the previous cycles, that is a legitimate concern. I'd love to see sort of a correlated figure of how much that is across all projects. I would imagine it's not as high of a percentage as we would think, because a lot of those projects really have either succeeded or have gone to zero effectively at this point. Gollum being a notable outlier, I would say. But yeah, that's an interesting thing to monitor as well in the market.
Definitely. Lots to monitor. Tom, we're so glad you're doing it instead of us. We'll just call you up next time we need a debrief.
Just DM me on Twitter. I'm terminally online. I don't leave. So.
Yeah, you are terminally online. I mean, these days it's just about launching spaces and having people pile in. So we'll be able to get you on short notice next time. That was a really great breakdown of all things going on in the world. We could probably keep talking. Andrew, I think we're going to have to dig into some of this stuff, and maybe we can catch up on the next episode. Lots of great guests teed up for this summer. And so, yeah, please tune in. Tom, thanks so much for joining us. That was terrific. If you like this episode, make sure to follow the podcast, give us a like on YouTube and anywhere you get your podcasts. And Tom, where can people find you online? Because you're a great follow on Twitter, tons of great stuff. I almost used a swear word there. So what's the handle?
Dunleavy, my last name, 89 on Twitter, Telegram, wherever other social media platforms are coming in the future.
Awesome. Love it. Okay. Thanks, Tom. We'll catch you next time, man.
Thanks.
Cheers. Bye.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.